word coming in from Geeta Gopinath, but let's also talk about markets then. And Nifty has now slipped below that 25,800 mark. To decode what the outlook is, Kunal is now with us in the studio. Kunal, afternoon. Nifty now below 25,800. Your view, both on Nifty and Bank Nifty?
Yeah, we are both below the psychological marks for both the indices. The Nifty back again below the 25,800 mark. The more crucial support for the Nifty is 25,750, where we bounced off the last time almost a 250, 300 point kind of a bounce for the Nifty the last time when we hit 25,750 mark, which also apparently coincides with the 50-day moving average. But the concern this time around is the weakness in the banking index, and that index being falling below the 59,000 mark. And trying to test the previous lows which it hit I think a week or two back. That I believe could be a concern for the markets, because even with the strength in the PSU banking names or maybe some sort of a resilience today, you're not seeing that the Bank Nifty is showing a tad bit of an outperformance. The put call ratio for both these indices are almost at 0.56 and 0.76 respectively for Nifty and Bank Nifty. Maybe that could call in for some sort of a respite on an intraday basis. But then with this retest of the previous supports, I believe if we break below the 25,750 mark, then I think there could be a chance that we may slip further for the Nifty as well as for the Bank Nifty.
Okay, so that's the take coming in on where the markets are headed. Kunal, the weakness continues to persist in the broader end of the market as well. Yes, some recovery, very nominal, something that we've seen over the course of last week. But once again, it's the small cap space that is bucking the overall trend too and is trading deeper, with cuts deeper than the rest of the market. What is your take on the broader end of the market, especially the small cap basket?
See, the ratio charts are still indicative that the mid caps and small caps may not see a very big respite over here. So, and that's one of the reasons why in the last maybe few weeks, few months, the mid cap and the small caps have been skewed in terms of the pressure with respect to the large cap names. So I think that tilt and that skew or that comparative weakness from the mid caps and small caps, that will continue for some more time, because there has to be a point where, from say being at one end of an extreme in terms of the ratios, you have to either come back to a normalized range or the lower side of the range, and that generally takes a lot of time for the indices and the sectors to try and narrow down their mean reversion. So I think in that context, I would probably expect that this is a phase where the mid caps and small caps would underperform, the large caps would shield the market volatility as such, and that's where you might probably get to see a relative outperformance. So you have to be very, very choosy, very selective with respect to the kind of stock picks one takes up specifically from the mid caps and small caps, because I believe that this disarray of sorts will continue for at least another few months to go.
Okay, so that's the view coming in on the index level and broader markets. But Kunal, some stock specific ideas for our viewers this afternoon?
Yeah, so two buy calls focusing on large cap names and especially the relatively low to moderate beta stocks. Sun Pharma is apparently one of them. The stock showing signs of strength, trading at 1785.90 thereabouts on the spot levels. So would look out for targets in the range of closer to 1850 for Sun Pharma, stop loss at 1775. And the second stock, which is again showing a little bit of a respite on the short-term basis, is I'll just get the name of the stock. That's Infosys, because even that stock is showing signs of a recovery. The IT stocks are more or less trying to just about get back into the shape in terms of a breakout. Infosys nearing that 1600 mark as a breakout point. So 1650 is where I would place the targets for the near term. Stop loss at 1575.
Okay, Sun Pharma and Infosys, so the larger caps and the defensives are looking good to Kunal right now. But let's just focus and talk about a stock that has been doing exceedingly well for itself today, and that is Meesho. Let's have the chart for Meesho and see if it still continues to be locked in upper circuit. Yes, it does. And it has been there since the midday mark of the day. Very good move coming in from Meesho today. And this has pushed its CEO and co-founder Vidit Atre into the billionaire territory. Vidit Atre, who holds 11.1% stake of Meesho with about 47.25 crore shares. This move today brings his stake in terms of value to 10,220 crore, which is slightly above the billionaire mark. So very good move coming in from Meesho that's made its co-founder and CEO billionaire today. But why this move in the first place? Let's understand that. This is on the back of a very bullish brokerage note coming in by UBS this morning, wherein they've initiated a buy rating on the stock with a target price at 220 rupees per share, which now after this move is not much higher for Meesho. So let's see if there is a further addition or a further upgrade in terms of their price target coming in for Meesho. They believe that the company's asset-light strategy and negative working capital business model will do well for its margins, its financials going ahead, and this will also boost profitability, which is unlike other internet platform players who are in fact struggling to grapple to profitability. They are modeling net merchandise value, which is the NMV CAGR of 30% between FY25 and FY30. They're also modeling contribution margin and adjusted EBITDA margin as part of the total NMV, reaching 6.8% and 3.2% over the next 5 years, or by FY30, that is. They also say that what could be the reasons that could drive this NMV to the 30% CAGR till FY30. Annual transacting users are expected to grow from 199 million now to 518 million in the next 5 years. So that's a very big push coming in. In fact, it's a 2.5x growth that they are penciling in. Annual ordering frequency will increase from 9.2 to 14.7, and AOV, which is the average order value, is expected to go down. Despite this, they're saying that this could be a good thing because Meesho is going to be passing logistics efficiency into its own ecosystem, which is a very big positive coming in for Meesho. So yes, second straight day of gains coming in for Meesho. Locked in upper circuit today, but the stock was also up about 8% higher yesterday before it simmered down with a 5% uptick. This is on the back of some very healthy volumes that we saw in Meesho yesterday, to the tune that 44% of its total free float market capital was being traded on the bourses yesterday. So that's the kind of liquidity crunch that Meesho was seeing. On the back of that, Meesho did well yesterday, and on the back of this UBS note, it's doing very well right now. But on that note, it's time to slip into a very short break. On the other side of this break, we'll get a better sense on some of the stocks that are buzzing both on the fundamentals and technicals. So be with us.